Welcome guys to my YouTube channel. I hope you're all well and blessed. So as we start, I would want to just say something about what we're going to be doing in this channel. Number one is we're going to be doing back testing and forward testing. We want to really know, suppose you have a strategy, like I am going to be showing you the strategy that I've learned from ICT, and actually it's working so well with me. And once we do the back testing and forward testing, I'm going to show you in future videos how we're going to do our journaling, because those two things are actually the most important parts of a trading journey. And once we have figured out that and we have back tested for a while, I believe that we are going to be able to have much confidence in entering trades and having a narrative of where the market is going. So I'm just going to give you a small review of what you can see on the screen, and you'll be able to uh, to know what's really happening with this market. Now, if you can see clearly, we are trying to do the back testing for Nasdaq 100, and the reason I chose this is because ICT is focused on giving reviews about forex and futures, and mostly about futures, but his concept, which are working in Nasdaq futures, are actually working in the index continuous futures, which is a CFD, and I actually implemented those concepts from him. And as I narrate what was happening on Tuesday 6th, that is on May this month, I hope that you're going to find insight with this video. And if you have any question, just put it up, and we're going to talk about it, and we see whether we can answer or whether we can research and learn together. So this is Nasdaq continuous futures contract, and I want to just show you the things that you're supposed to be doing every day so that you can understand this market better. First thing first, always note the midnight time for the next day. So for this day, this vertical yellow line delineates the start of the day. The market dropped, and when it reached at 7 a.m., you're supposed to have a vertical line there. At 8, you also have a vertical line, and at 9 a.m. another line, at 9:30 another line, and at 10. As we continue forward, I'm going to explain why do we have these lines and what are they for. So let us try and understand the narrative of what I always look for when I'm in the market, between at the pre-session or the pre-market session. That is anything on the left of this line, that is at 9:30 a.m. anything on the left up to 7 a.m. that is my pre-market session. And what do I always look at? So when we come here at 7 a.m., we can see that there was a previous high that was created right here. The market went higher, rallied, and took out that high, that previous high. After that, the high that was created now between 7 and 8, it becomes our buy side liquidity. I've denoted that with BSL. Then after the market took out this previous high, the market dipped lower, then it retraced a little bit just to fill this insufficiency right here. This is a CB, so we had to fill it. Then after that, the market dropped further to take out these previous lows, and it created this low. After sweeping out these lows, we can see that the market retraced to a premium level. What do I mean when I say a premium level? If you're conversant with ICT concept, you know that after a rally, there's always a retracement. But the retracement can be measured using a Fibonacci retracement tool. I'm going to use the default one before I introduce the one that I always use to measure. As you can see, the market rallied, it dipped from here to here, then it retraced above 50%, which is represented by 0.5, above it, and anything above it up to 0.786, that is 78.6%. That is the premium level. Now that we know what we mean by premium, once the market retraced to the premium level, it created another low which took out the previous low. And immediately after it did that, the market retraced again to another premium level, and immediately it did that, it went lower. The reason why I denoted this low as my sell side liquidity is because at 7 a.m. what I'm always looking at is where are the equal highs and equal lows being formed. And if you can see clearly, at 7 a.m. the highest high was this one, the lowest low was this one, and this one. And now we have two equal lows here, and we have sell side liquidity being denoted by those two equal lows. And now this first high after 7 a.m. becomes our buy side liquidity. Once one of the liquidity is taken, then our target is supposed to be the second liquidity, which is this one. Now let us try and go further and understand what did the market do after taking out the liquidity right here with this small dip below this green sell side liquidity line. Once it did that, it was approaching 9:30, and between 9:30 and 10, that is where we say we have a market open. That is the range of how the market open works. And if you can see clearly, it took out the sell side liquidity, then immediately it did that, it went higher to take out the previous highs, this one and this one. And above that, we also had a fair value that was created earlier between 7 a.m. and 8 a.m. So after taking out this buy side liquidity and this one, and retested and respected at the same time this fair value by the bodies respecting the same area together with the wicks, it dipped further to a random area, which I know is not random for everyone who are conversant with ICT concept. What do I mean by this? Earlier I had said I was going to introduce how to measure the extent of where the market is going to fall or to rally. Let me show you what I mean by this. If I was to take my measurement tool from here to right here, this is what ICT introduced. That is using the Fibonacci retracement tool to measure possible areas where the market may approach. This tool helps us to know where to take our partial profits and where to have our final targets. Therefore, the reason why you see this place is denoted as negative 0.5, once this sell-side liquidity was taken, the market fell further to that area, which was not random for those who have learned ICT concepts. And immediately the market was in the market reached negative 0.5. It created a low. I want you to see clearly. It created a low, then it retraced a little bit to this CB and went lower than it. Let me just take this on to the side so that you can see. Took out that liquidity below this low and retraced further up. I returned this one where it's supposed to be at 10. And once it closed above the CB, the market retested that area. And that is the area of our interest, because we said earlier that once the first liquidity is taken, we are supposed to look for an entry, mechanism where we can enter as we target these highs, the one that I have denoted here by BSL, buy side liquidity. And if you can see clearly, we had two entries right here. The market gave us the first fair value, which is a CB. We could have entered right there, and our stop loss, let me just show you clearly how that trade setup would have been. We would have entered right there with our stop loss right below the fair value, and we target the buy side liquidity right there, which was well reached and achieved. If we missed that entry, we also had another fair value that was created right here. If I can zoom in, you can see that this was a intermediate high right here, just a small high taken out by this up close candle, retested once, twice, then the market went higher, retraced a little bit, but it had already given you an area where you could have entered. If you would have entered right at this open of the first candlestick after this, the one that had closed above, then you would still risk something like this right below this first fair value, because sometimes the volatility after the market opens is always quite high, so you're supposed to give room for the market to play. And if you can see clearly, if you would have entered at the second fair value, you would have given the market room to play around this area that is between this fair value and this one. And once it was respected, you can see that it reached the target that we wanted, which was right here. And the narrative the narrative that we are trying to, or I'm trying to understand, is this thing that is the thing that I'm trying to explain occurring regularly. And I want you to stay tuned with this channel so that you can see that it is not only occurring once, but every day, as ICT says. So be vigilant and be observative, because these things occur every day. I'll just give a preview of what I'm just trying to teach here, and we shall recap with the video. Now, from here at 7 a.m., we have our vertical line. At that time, we can see that this previous high was taken, and this high was our first one. So what are we trying to say? We are trying to look at where are these liquidities being engineered. And the first one that we can see is this one, which is the buy side liquidity. We're trying to look for equal highs and equal lows. Once either of them is taken, like this one, these two are taken right here at the market open, and for confluence, for you to have high, probability trades, always check at the time before you enter with the price. Because suppose you entered right here, you would have been stopped out. But if you waited for the right time, which was it was in between the market open, that area, you can see that it gave you a chance to enter, and it was at the right time. So I hope you have seen that with more of such, we can always come up with a strategy that is simple. We're not using indicators, but the magic, the market logic of where the market is trying to navigate. You may not have the daily bias of where the market is going, but once you give a narrative that flows with how the market has been going, then it is easier to have small runs that will pay you. And for instance, if we had entered right here with this second fair value, we could have just taken our partial profits or all our profits right above this high that was created at the market open, and still it would have been a profitable trade. So it's not about getting the home run, but knowing where exactly is the market trying to go. And we ride with the big fish. So again, I would want to say that this being our first video, I hope you're going to enjoy, and you're going to engage as we at the comment section. Help me to understand where I'm not giving the point the right way, and all will be well. We just keep on helping each other, and we're going to grow together. So for now, be blessed and stay focused.